Hey everyone, welcome back to MSTR Daily. Today we have some pretty big news to get up to date on. Michael Saylor just tweeted this morning that Microstrategy has completed their senior convertible note offering and it was upsized again. So we're going to take a look at these details and see how it affects their annual interest expense and total blended interest rate. We're also going to talk about Microstrategy's last purchase of Bitcoin and estimate how much is left in their ATM. We're also going to do a market update and see how the S&P 500, gold, and Bitcoin reacted to the Fed cutting rates by 0.5%. Also, is it finally time to say goodbye to 58K? A few analysts think so let's get into the video. But right before that, go ahead and check out MSTR Pro in the description below if you want access to my trading videos and my options portfolio. Okay, let's talk about this convertible note. So this morning, Michael Saylor announced on Twitter that their recent convertible note offering was upsized once again to $1.01 billion at an interest rate of 0.625%. It was initially announced for $700 million and then upsized to $875 million yesterday, and then it was upsized again to over $1 billion. There is so much demand for these instruments because they are some of the best performing assets in the debt market. Also, the last time we saw MSTR's converts have this much demand was March 2024. They issued the notes at the same 0.625% interest rate. The offering was upsized due to the demand, and then they went back into the market a week later and borrowed even more. So if this is the reaction that they got from this offering where they upsized it by $300 million, I wouldn't be surprised if we see another one in the coming weeks. It could maybe even happen by the end of the month so that they could include it in their Q3 earnings report. So if we do the math now, they need $532 million to pay off the 2028 senior note, which leaves them with $518 million to buy more Bitcoin just from this convert. This morning, right after the announcement about the finalized convertible note offering, Saylor tweeted that they had just purchased another 7,420 Bitcoin for $458 million at an average price of $61,750. This brings their total stash to 252,220 Bitcoin. And their cost basis inched up slightly to $39,266 per coin. Even though he posted this after the announcement for the completion of the convertible note offering, I looked at the 8K they filed with the SEC for this announcement, and it says that as of September 19th, which was yesterday, they had purchased this Bitcoin. That likely means that the $458 million came from the ATM, their at-the-market stock offering. So if you subtract that from the $890 million that was left after their last purchase, there's $431 million left in their ATM that could be gone by the end of the month, if not by early October. You also have $518 million remaining from this convert, so MSTR still has $950 million worth of purchasing power to buy Bitcoin. And if we assume a projected average price of around $65,000 per coin from now through the end of September, that means that they can buy another 14,600 Bitcoin. I'm also projecting that we see an announcement about more purchases from their Q3 free cash flow around $11 million, which adds another 197 Bitcoin. If you add all of this to their current holdings of 252,200 Bitcoin, then I project that they're going to have around 267,000 Bitcoin when they report their Q3 earnings in late October. So stay tuned for that to see how close my projections are. Okay, let's take a step back a bit because I haven't covered their Bitcoin buy from last week. Earlier last week, Michael Saylor announced that Microstrategy had purchased 18,300 Bitcoin for $1.11 billion at an average price of $60,408 per Bitcoin. He also added in there that they have achieved a Bitcoin yield of 4.4% quarter to date and 17% year to date. At the time of the announcement, they held 244,800 Bitcoin on their balance sheet for a total cost of $9.45 billion with an average purchase price of $38,585 per Bitcoin. They got the funds to purchase this Bitcoin from the $2 billion ATM offering, which they announced back on August 1st. It took them just under a month and a half to issue $1.1 billion worth of shares, so there's a good chance that this ATM is complete by the middle of October at the latest, although it could even happen by the end of September here to get it done for the Q3 earnings report. MicroStrategy has been on an absolute tear this year and have purchased over 60,000 Bitcoin in 3 quarters, and they can potentially get up to 75,000 Bitcoin if they keep buying through the end of September. And what's crazy about this is that this is more than the next few public companies' combined total holdings. MicroStrategy is a monopoly and they have a clear moat and first mover advantage in this global race of Bitcoin accumulation. MSTR ended 2023 with 189,200 Bitcoin, and they have the potential to end 2024 with 100,000 more Bitcoin than they started the year with. I assume now that they have cleaned up their balance sheet, there is room for one more convertible note offering that can maybe net them around 25,000 more Bitcoin. However, I do think that we will see new all-time highs by the end of October. So if we average an $80,000 Bitcoin price in Q4, MSTR would need to raise $2 billion to purchase 25,000 Bitcoin to get to that 100,000 number added on the year. And that's my current base case. I think we see one more aggressive convertible note offering now that MSTR has more room for more annual interest expense, and it will likely be the standard 600 million to 800 million offering, and from that, they will be able to purchase 12,000 Bitcoin or so and grow their stack to almost 280,000. MSTR has not been messing around this year and has increased their holdings a substantial amount. But this is also probably a good time to note that I don't think MSTR will borrow or dilute too much in 2025, at least to the extent that they did this year. In 2021, they issued shares, borrowed a lot of money, and assumed 100K Bitcoin was right around the corner just like everybody else. This led to them buying Bitcoin in a dilutive fashion for shareholders, because if they buy Bitcoin with debt and the Bitcoin goes down 50%, or if they issue shares to buy Bitcoin and then Bitcoin goes down 50%, then they still have more shares outstanding and more debt, but their Bitcoin is now worth less, which has diluted shareholders. And although the instruments to buy more Bitcoin will be tempting, like a higher multiple on their Bitcoin holdings for issuing shares or higher volatility for cheap convertible notes, I think they're going to show a little bit more restraint next year, and maybe their goal is to get to 300,000 and then see what happens. This is all assuming that the Bitcoin cycle continues, which is not necessarily certain either. I do hold the view that the cycles will continue until they don't, but Saylor has publicly said that the ETFs have fundamentally changed the structure of the market. So we could start to trend higher over time in a less volatile fashion, but we'll have to see what plays out. If anything, Saylor and MicroStrategy are single-handedly trying to put us into a bull market by gathering up a large portion of the liquid supply. BitPain also had a great tweet here analyzing the effect of the halving on the supply of Bitcoin at the margin. Quote, "It has been approximately 21.3 weeks since the fourth Bitcoin halving. We're at block 861,593, or halving plus 21,593 blocks, implying a net reduction of 67,478 Bitcoin compared to if the halving had not occurred. That is the equivalent of approximately a $4 billion buy that will never be sold and will repeat every 21 weeks going forward." Notably, this was offset by the 50,000 supply sold by Germany and some of the US, which, side note, if the US did sell, it was probably less than 10,000 coins, and the Mt. Gox stash. Supply shock delayed, but loading. Although the halving might not have as big of an impact as it had in the past, it still absolutely matters, and it reduces the amount of liquid supply in the market. Okay, for our next story, let's move on to how the market is doing after the Fed cut rates by 0.5 point on Wednesday. It was definitely volatile while the market was digesting the 0.5 point cut, because this was the first FOMC meeting in a while where there was uncertainty in the market about what the committee would do. I projected it would be a 50 basis point cut based on Nick T from the Wall Street Journal and the former Fed officials saying that they would cut 50 if they were in Powell's shoes. But after the announcement was made and the press conference was over, the market took some time to settle before shooting up on Thursday. The S&P 500 broke out to new all-time highs, which historically has been one of the best times to buy stocks. So as rates keep coming down and if we avoid a recession, stocks stand to do very well over the next year, which is very important for MSTR, especially when it gets added to the S&P 500 and QQQ. Another indicator that quality assets will continue to move higher is gold. Gold has a lower multiple on the increase in global liquidity than Bitcoin does, but it did break out to a new all-time high, over $2,600 per ounce, and this is signaling that investors are looking for a safe haven as T-bill yields decrease and monetary inflation increases. And next, if we look at Bitcoin, it's still about 15% off its all-time high in March, but from a TA perspective, it looks as though the market is preparing to move higher. For the first time in 6 months, it saw its first higher low from the bottom of 49,500, and right now it's on pace to put in a higher high if it can break above 65,000. If this happens, I think it shows that the market dynamics have shifted back into an uptrend before some of Bitcoin's best months historically, October and November. I stated this in a Spaces last night that I think we break $80,000 by the end of November and 100K by the end of the year. And if not by the end of the year, I think it can happen by the end of February, which is Bitcoin's second best month, especially in a post-halving year. So with that said, is it finally time to say goodbye to 58K? Well, Dr. Jeff Ross seems to think so. He said on Nostr, quote, "I hate to be that guy, but I feel compelled to post that we are at or very near the point of saying goodbye to 58K forever. So maybe Bitcoin can finally break out higher and leave this zone forever like it has done with so many other key price levels in the past. Even if there is another brutal bear market in the future, I would place the probability of revisiting 58K pretty low." If you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.